Joining me on the program now from Christian Savings, Grant Marshall. Grant, kia ora, thanks for your time today.
G'day, Andrew. How are you?
I'm doing very well indeed. This is a bit of a political hot potato. Nobody wants this one. Nobody wants the ball to be passed to them on capital gains tax. And we're still a long way out from the election, but still that question keeps being asked, particularly of Labour, of course, because it was rejected by former Prime Minister Jacinda Ardern. It wasn't on the table, despite recommendations from their tax committee. But some of the other minor parties are saying, we think it's a great idea, but then again, they're not likely to get over the threshold. What's your thoughts on this one? Is it a viable contender, both economically and politically?
Look, my view is I think New Zealand is a little bit out of step with the rest of the OECD in terms of not having a capital gains tax. We've kind of got a de facto one with the bright line test, but it's really just limited to properties and doesn't take into account other asset classes that potentially could be caught up in the sweep of things as well. But look, in terms of this being a political hot potato, the more I read about it, the more I see there's an argument going on behind this argument, and it's this question of fairness.
Yep.
And we don't ever sit down and determine and decide, what do we mean by fairness? What does fair mean in practice? And let me give you an example. So for some people, they'll talk about equity, and that's a term that scares a lot of us in the business community, or those with an economic mind, because they say, do you mean equality of outcome? As in, I'll do the same amount of work as someone who does nothing, and I'll get the same reward as somebody who basically does, Steve Jobs kind of level of work and innovation, and we end up in the same. And that scares a lot of people, and that's what they might think you mean. But I don't know if that is. But yeah, we've got to have a debate about fairness, I think, before we talk about a debate about capital gains tax. I think that's really where the debate lies, in my view.
Certainly. And often when we talk about capital gains tax, it's either that or a wealth tax. And some political parties are saying, hey, why not both in this regard? There's a little bit of envy in this regard. People that are richer than me don't deserve to be richer than me. We should punish them for being successful business people so that I don't have to pay so much tax. It's a little bit of that happening, perhaps even covetousness at a spiritual level.
Look, that's often a standard retort, isn't it, from those on that side of the fence or that side of the debate, to say you're just jealous and look, I've worked hard and look what I've done. I think there's scope to do both, celebrate the good you've done and the thing, but also make a fair contribution. So, the large proportion of our tax burden falls on income earners, and particularly people between the age of 30 and 60, shouldering an enormous burden of that tax. And really, I think if you boil it down and ask people what do they really want, they want maybe just some of that burden, but not all of it. I think too quickly we jump to the tall poppy syndrome and say, you're just trying to cut down rich people or people that have worked hard and saved. But really, I think a lot of people would just say, let's just make this a little bit more even, a bit more of an even playing field. I'm not saying we have to all end up in the same place, but maybe it'd be a little bit easier. We might have a bit more spare money to help with the bills and things like that if I didn't have to pay so much tax.
On the fairness question, though, because, it seems ridiculous that people doing totally different jobs should be paid the same amount of money, regardless of how hard they work. But it also seems ridiculous that some forms of income or wealth generation get taxed and some don't. That seems like particularly the property market is too big a loophole. And the government is losing out on quite a bit of revenue by saying, you know what, we're not going to go there because it's not worth us doing that politically.
Yeah, look, there's the political reason, right? Like you say, it feels like this is a zombie policy that rises from the dead and occasionally is just, shot down by everyone else, but it just keeps coming back to life.
Yeah.
And there's a reason for that. I think we look at it as a silver bullet in some respects to fixing the woes of our tax system.
That's werewolves, really, not zombies, by the way. Just.
Well, both are both fictitious characters.
Exactly.
I think we can have that debate separately. But the thing about it is that it's not a silver bullet, and in fact, in many cases, it may not generate enough revenue to even be worth doing. So it might generate some, but the complexities of having to run this. I mean, Australia's capital gains tax policy is 892 pages.
Wow.
You try and work your way through 892 pages to make sure you're compliant. I mean, we found it hard enough um, as a country dealing with a couple of lines in the triple CFA,
Mm.
which asked banks to get quite prescriptive with affordability requirements, and that costs millions to most banks to comply with that. You try and comply with that level of complexity as well. And then the alternative to that is, even if you make the best legislation, people who have got significant means and wealth will find ways around the legislation. And that just is common. They'll find alternative investments, they'll find alternative ways of
Yeah.
structuring
I
things.
mean, this could
Whereas,
be great news for
again,
accountants and family trust lawyers, for
absolutely.
example, right?
Exactly. Yeah, they'll be winners in the end of the day, and that's fine. I mean, that's how the economy works. The thing I think about is, is it really the silver bullet? Is it really going to result in a much fairer tax system, or are we just going to be saddled with additional red tape and maybe marginal benefit at that? So the jury's out on that one for me. But again, look, I think New Zealand's proposed code at some point was only 300 pages. So we're a little bit better than the Aussies, I think, in that respect. But
Well,
hey,
in
it
that and many
starts
other
there, right?
regards. The other aspect about it is capital gains tax, okay, as an income generator, and the jury's still out on that one, but also as a way of taking a little bit of heat out of the property market. Because some economists have said we don't really have an economy here in New Zealand. We've got a property market with a little bit of dairy on the side. That if it wasn't so lucrative to invest in houses and rental properties, then there would be more opportunities for young couples to get their first home. Again, is that too simplistic, or would it have a positive effect, do you think?
I think whoever made that case has probably overstated their case a little bit. And you look, probably not fair to all the hardworking SMEs and businesses out there who really are really the engine room of New Zealand,
Yeah.
and in many ways go unseen and are kind of unfairly tarred with that kind of brush sometimes. But yeah, look, investing in property has been a lucrative thing, investment, and it still will continue to be. I think it's functional, it's useful. There's always a need for it. People have got to live somewhere.
Yeah.
But we also want to encourage innovation, and I think that would be a step in the direction to say, well, maybe it's a little less lucrative. Perhaps it might sway some more people to, instead of investing in a property, they might decide to invest in a business and
Yeah.
might decide to take a punt that way. The problem with that, though, and this is what I think a lot of people don't realize, is so much business lending in New Zealand is very tied to a residential property.
Yeah.
A lot of main banks are unwilling to take a punt on individuals without a secured property in the background. So,
Mm-hmm.
you can end up being a snake eating its own tail if that's what you want to happen.
Yeah, yeah. Hey, it is a complicated issue, and I'm sure we'll hear a lot more about it between now and the next election. But hey, thanks for the work you do at Christian Savings, of course, christiansavings.co.nz, for more information on, another form of sound investment. Grant, thanks for what you do. Thanks for joining us.
You're welcome, Andrew. Always a pleasure.
Hey, thanks very much for joining us in the Rhema studio. Thanks very much for watching the interview. It's kind of nice to have an audience, actually. And if you did like what you watched, then do give us a like, do give us the thumbs up. And if you'd like to see more interviews like that one, or perhaps even better, subscribe and those interviews will come straight to you. Don't forget to turn on your notifications, and we'll see you in the next one. Cheers.